Most people don't think about disability insurance until they need it, and by then, it's often too late to make a smart decision. Especially for high-income individuals or business owners, disability coverage can protect income, preserve retirement plans, and secure long-term lifestyle goals. Today, we'll break down how disability insurance works and what to look for to ensure it truly protects you.
All right, Spencer, today we're going to be talking about private insurance, specifically for disabilities. So for all you tiger handlers out there, this one is for you. What do we need to know about private disability insurance?
Well, first of all, I don't think that it's sold to tiger handlers, but if you are a tiger handler, you probably do need some disability insurance. First of all, not all private disability insurance policies options are created equal. One of the key things to know is that you want to look at own occupation coverage. That's the gold standard. So if you can still work, but maybe you couldn't do the job that you had as maybe a specific type of attorney or surgeon or whatever it might be, if you instead could take calls, and process them for an insurance company, or you could be an administrative support person. Then they're going to say, actually, yes, you can work, but if you have own occupation coverage, then you're going to be able to take advantage and claim on that policy based on the fact that you can't do that own occupation anymore.
And that own occupation coverage is oftentimes, it's the most expensive coverage.
Right.
But if you are a surgeon or something where you are in a high income job, then you're oftentimes going to need to replace a higher income that you have earned. Even if you have substantial savings, if you have an accident and you're a surgeon and you can't operate anymore and you're maybe in your 30s, 40s, or even your 50s, if you don't have a substantial amount saved, this could be the standard that you really need to look for.
Well, and even specifically on this, as a physician, I was talking with one physician at one point who had a close friend that was a heart surgeon. The heart surgeon qualified because he had some hand tremors, so he had very strong own occupation coverage. Now, if he hadn't had that, then he could have still taken a job as a surgeon meeting with patients, but it would have only paid him about a third as much, which was not going to support his family's lifestyle, those kinds of different things. So even within one's profession, having a really, really tight own occupation policy is very helpful. The other thing to note is that some policies, you need to really look at a rider where you would have partial or residual disability benefits, because for instance, in my policy as a financial advisor, I like the idea that if something happened to me and I could only practice maybe for half as many hours, maybe I just wouldn't have the energy or couldn't, do things, I would still like to practice. But it's an all or nothing for a lot of policies. Either you can fulfill that job, that function, or you can't. So there's no residual or there's no partial disability that's allowable. It's yes or no. And if you can still even do it for a partial amount, then they're not going to help you recover the remaining amount of that benefit. So let's just say, again, you were making $200,000 a year and you could only do 40% of the time that you once had been able to. Well, that's $80,000. That's not going to be that same level of income if you're trying to support a family or something like that. So it's really helpful to have riders that deal with that partial or residual disability that would be necessary.
Okay, yeah. So let's shift a little bit and go from the own occupation to maybe one step down, the any occupation. Talk us through the general parameters of that policy.
Well, any occupation policies, it's hard to categorize them all together, but in any occupation policy typically would be, can you continue to work at all?
Yeah.
And that would be the definition that Social Security disability would have in being able to assess, okay, you're disabled, but is it just that you can't do that occupation that you were trained for and that you like the most? Can you do something, again, that would be different than that? So in any occupation policy is oftentimes cheaper, and it oftentimes will not pay out if you can do anything in the workforce, which you have to be really, really careful of. So we would tend to lean towards those policies, again, that speak to your specific profession and level of income.
Okay, so let's talk about the differentiator in terms of elimination period. So we talked about it in our last episode about Social Security disability insurance benefits, that there's that 5-month waiting period that Social Security puts forth. What are elimination periods within private insurance?
Well, an elimination period is like a deductible. If you think about your homeowner's insurance, you're going to pay more for a policy that has a deductible that's $250 than a deductible that's $10,000. So the amount that you bear on the bottom side there, the first dollars, is going to influence how much that policy costs. One of the ways that a lot of times more affluent folks will deal with this is that they will actually choose a much longer elimination period. They might choose 6 months. They might even choose a year as an elimination period, because that makes the policy a lot less expensive. They may say, hey, I've got plenty as a primary reserve. I don't want to pay more than I need for this policy, so let me just pay a lot less for the policy. Let's make sure that the other terms of the policy are really strong. Maybe it's own occupation language that's in there. Maybe it's making sure that the policy pays out to age 67, full retirement age. Maybe there are other provisions there where it steps up in terms of a cost of living adjustment. But what they do on the other side is they pay less because they'll accept an elimination period that's far longer. Now, the key here is you've got to have a robust primary reserve if you're going to do that. Right. So number one rule of insurance is always don't buy what you don't need. But one of the ways that you can limit the need is by having a very robust primary reserve.
Right. So Spencer, you've got two different periods we're looking at here, both the elimination period and then how long the policy lasts. Anything else that you want to touch on in terms of those two periods, how to plan financially for those, or just any general things there?
Well, you certainly want to make sure that your policy is going to get at least out to retirement age. There are policies that are out there that might be really more intermediate in nature. They might pay for between 2 and 5 years, but they might not pay out to, again, your full retirement age, or at least age 65, typically there. So you want to make sure that the longer term benefits are in place and that you're comfortable with when those benefits will cease paying. If you're only being paid to 65, then you'd want to be comfortable with the income sources that you'd have at age 65. The good news at age 65, at least under current law, is that you have access to Medicare, at least by that point. So that is one of those good features if you choose to go in that direction.
Yeah. All right. So insurance policies are contractual agreements. And oftentimes with contracts, you can add on different pieces to the contracts, different riders. This is in a lot of ways where it kind of becomes a choose your own adventure of what do you want to add on. And because each rider comes with a varying level of expense, a varying level of risk that you take on or that the insurance company takes on. What are some of the key riders that we need to be aware of within these disability insurance policies?
Well, the first one is a cost of living adjustment element that can protect against inflation. So you can imagine if you're 25 and let's just say your income is $100,000, you want to replace 60% of that income, $60,000. Great. Okay, that's probably a good place to start. Well, 10 years down the road, that $60,000 of income, even if it's tax-free, is not going to go near as far. The purchasing power there might have dropped to $50 or $40 or even $30,000 if we have a high inflation period. So what you want to really think through is the cost of living adjustment that may be available in these policies and what that looks like. You're obviously going to be much more concerned about this if you are a 25-year-old and you're thinking, okay, heaven forbid, but I could be disabled for 40 years.
Yeah.
Than you are if you are a 60-year-old and now you've got a time horizon that might be 5 to 7 years before tapping into those benefits. So that's an important piece, especially for the policies that are going to be enforced hopefully for many decades. A second one that you really probably need to think through is if it gives you future purchase options to allow you to increase coverage. So for instance, with my policy, 15 years ago, I come into the practice, I get a disability insurance policy, but, the amount there is much less when you're right at the beginning of a new profession. You want to have the capacity to, as your income grows, purchase more disability insurance over time. So one is the inflation side of things. Does your policy keep up with inflation? But the other is, okay, well, if you start the policy, and let's just say, again, you're a professional, getting into the world, and you start at $75,000. Well, it may be that 15 years later, you're making 3 or 4 times that amount. You would like to keep that same policy in place so that you don't have to requalify with a new policy. And these future purchase options allowing you to increase that coverage later on without having to requalify is a critical step there. The final one that I'll mention, and some policies have capability for this, some are just embedded there. Sometimes you have to pay more for these, but would be a catastrophic coverage rider. And this would be in a circumstance where you might have some kind of additional need where you have long-term care needs much earlier in life than what you might anticipate. So if you qualify for this, you might have 2 of 7 activities of daily living that you cannot perform, just like a typical long-term care policy there. Or you have cognitive impairment would be another way to qualify for this. But it may give an additional amount to be able to help your loved ones care for you in the midst of a home or maybe even some other facility. So that can be an additional amount that you can pay for that sometimes, or it's just embedded in the plan. But it's an important piece to consider, because if it's not just that you're disabled, but okay, now you have huge needs medically and with long-term care that your loved ones would have to deal with without some extra funds.
Right, absolutely. Well, that last one kind of dovetails into our last major point, is that disability insurance really needs to coordinate with an entire financial plan and not conflict with them. So talk about maybe some of the tax implications. What are some of the other things that we really need to hone in on before signing one of these contracts?
Well, you need to consider that if you are receiving income like this, typically you will pay the premiums with after-tax dollars. The good news is when you pay the premiums with after-tax dollars, the benefits come to you after tax. So you're not paying tax on these benefits, which is why typically a policy will replace 60 to 70% of income, because you're not paying payroll tax, you're not paying federal tax, you're not paying state tax if that would apply to you. So you're able to replace the vast majority, if not all of the income, just through that tax mechanism there. The thing that you also need to think through, though, is does that amount of income allow you to save for retirement still? Because if you get a significant level of income, well, maybe that covers all of your expenses on a day-to-day or month-to-month basis, generally speaking, but it's going to cease at some point. And if it ceases at 65 or ceases at 67, will you have been able to save for retirement all along the way? So if you're 40 years old, and you've got 25, 27 years prior to that full retirement age down the road, in all likelihood, you'll have a need to continue to save towards retirement. So is that embedded? Does it either give you extra to save towards retirement? Is there some kind of mechanism where some of those funds are pushed towards retirement savings? You need to think through that particular piece, because those benefits will end on most policies. And as we circle back, the tax planning here is really important, because these benefits, again, they'll come tax-free provided that you've paid for them with after-tax dollars. So for business owners or other folks that might be thinking about this, and maybe you have a way to pay for this with pre-tax dollars, you need to be careful, because if you pay for it with pre-tax dollars, it's going to come pre-tax in those benefits, which will add significantly to your tax bill.
Right. And oftentimes what we'll see in these situations is that the benefit, if it's provided by an employer, it's provided as a group benefit. So your premiums are significantly cheaper than if you were to go as an individual to the private market. And so it may seem like, man, this is a great benefit. And we would often say, these are pretty good benefits. You just have to know, going eyes wide open into this, that, okay, if I get $2,000 of income, there's going to be tax due on it.
Well, and that comes back to also eyes wide open on all of these different parts of the verbiage of the contract, whether it's own occupation versus any occupation, whether you have a cost of living adjustment rider, whether you have a chance to purchase more as time goes on, all those different pieces. oftentimes, if the cost of the policy is minuscule, there are elements there that make it not quite as attractive as other options in the marketplace.
Right. Well, Spencer, thanks for walking us through private disability insurance. Clients, if you have any questions about this, we would love to talk with you. Otherwise, leave questions or comments down below, and we'll see you again next time. Take care. If you like these financial planning videos, please share with a friend, and if you have questions, go to our website at SeriousRetirement.com. This content was provided by Retirement Planning Services. We are located in Knoxville, Tennessee. You can visit our website at SeriousRetirement.com. The information in this recording is intended for general educational and informational purposes only, and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents. Advisory services offered through Retirement Planning Services, LLC.